Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, June 15th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Price pushed higher off the 24.17 to 19 zone of support and rallied, but fell shy of pushing through the recent highs of 24.43.5, coming about a tick or two shy, and then seeing a return back down. Here in pre-market trading, we've seen price take out the two-day lows and go back into the pivot range, actually the pivot-based EMA trigger zone, and also back to the previous month's high and close. So this is a zone here that has already been defended twice this month. The expectation would be that if these lows are taken out, that could be a perfect opportunity for bulls to come in and trap and push to new highs. So right now, looking at this pullback, and looking for bulls to defend some zone down here. And right now we're at the upper edge of that zone. This is where bulls have defended already. But if we've rotated back after a failed new high, typically speaking, you want to take out those lows and then look to trap for a move higher. So we'll see how this one continues to develop. But right now, intraday, we're seeing a downtrending market. So on an intraday basis, price held above the previous week's close on a couple of rotations right here. Previous week's close on a couple of rotations, lower highs, and then price takes out the previous week's close and takes out the previous session's close. And that leads to a move to the S50% expansion target on the PivotBoss pivots, and that's where we're holding between S25 and S50. So right now, downtrending market. The expectation would be for more weakness, perhaps toward 24.10 to take out those lows below 24.1675. We've already done a little bit of that, but we could be looking at even more weakness down below. I think any change of bias would occur above VWAP. So right now, VWAP currently at about 24.24s. Taking that bid would suggest a return back toward 24.31 to 24.34. All right, let's take a look here at crude oil. Now, crude has reached the first of a couple of targets that we talked about earlier in the week for bears. We talked about the downtrending behavior that we've seen. And then what I mentioned Monday pre-market was 46.30 was going to be the key level. If we push through it, we could see a stop run day that occurs. But if there's any failure to hold above 46.30 when that breakout occurs, then the expectation would be a move to 44.32 and 43.75. And so that's exactly what happened here. Price did reject above 46.30, closing back below that day. Day 2, same thing happened. Day 3, again, and that was on the heels of the EIA report, and that helped to see a downward expansion from this narrow 4-day range. So we saw a major breakdown out of that range and a push right into our first target. The expectation yesterday was that we would likely continue into this low. That's 43.75. So right now, the expectation would be sell the rips. Any return into 45.20 could be a great selling opportunity for a continuation downward. So if price gets up toward 45.20, still a selling opportunity on an intraday or swing basis. So right now, watching for that until we see some sort of rejection down here. Once we see rejection, it could be that we start to see the market turn around and head back up. So right now, downtrending structure overall. Today, mostly a sideways day. So right here with new lows. So again, any bounce could be seen as a great selling opportunity here off the recent highs, call it 44.80. And if price were to bounce even as high as 45.20, it could still be a great swing selling opportunity. So right now, the day trading opportunity is to flow it back up. We're seeing a rejection of the current low. So any pullback to 44.40 could be a short-term buying opportunity for 44.75. A return into 44.80 to 85 could be a short-term opportunity back down. And 45.20 also offers an opportunity to fade. All right, let's take a look here at gold futures. Now, gold in the higher time frame shows a major push higher after FOMC. We had our Fed day come out. Here it is right there. FOMC 614 is showing 1277.40. And so far, the first move is down. The first move is down. And so that's very important here. We've now hit VPOC, CVPOC, which is 1259s. That was the target that we had before 59.60 when we were mentioning a rejection of this high here would lead back. We finally got it proper here. And we haven't been finished yet. We got back to about 1250, 1247 half where we could go, because price, after reaching VPOC rather, tends to chop around it in some manner, either by going through it and chopping below, then coming above it and chopping above, or by chopping around it this way. So now that we've reached this area, expect the market to trade around it for a little while. So that could mean dropping down first, then popping back up. Very similar to this, you know, it reaches it here on that bar, and then it chops around it, boom, 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 then chops above it, then moves to an edge. So this could be a very tumultuous area right here to do any kind of business, but I think short term, the flow still quietly to the downside till about 47.5. We've reached the target. You know, it was a rejection of this high, implied a move to 60 to 59. We got that. And I always mention, after you see a rejection back to acceptance of some form or to a target, now you have to be patient for the next one to set up. So we'll continue to watch this one as well. All right, lastly, I wanted to take a look at ZB here. ZB is right at a major inflection point in the chart. We saw a major expansion day the previous session. This is something I've been talking about for a while, and probably way too long. Since the first quarter of the year, I've been mentioning that this thing is poised to push into 160 and perhaps back as high as the 163s. But we've failed to do that. Every time we get to the upper edge, primarily we've been looking to sell it and fade it until we can push through. That's when we finally did it here. And when we did it here, there was a major failure. And this is what we looked at in the trading room yesterday to compare the 2 days. Basically, on this one right here, it looked like we could begin to see strength and expansion. But what we're always looking for is the midpoint of that expansion day. The next day, you need to hold it for bulls. Once you give it up, as you do the next day after that, the expectation is that's a failure. And so here's the midpoint from the previous session. What I mentioned to our room was that once we close the day here, the day trade or overnight trade would be to fade it back to this mid. And so short term, we're pushing into it. And then once you get to the mid here, you would expect some sort of bulls to come in and defend responsive bulls for a shot at continuing this thing higher, right? If they can close above the 155s, 156s, this could be quite bullish, and we could be seeing that move up. But right now, I think there's a tendency to be cautious about breakouts, and I think that's obviously something that you should always be cautious with. Is anytime you see a breakout, there's a shot to see a failure. That's why, as professionals, typically speaking, we're looking to fade edges, fade reversals, because breakouts are rare. And so right now we have this thing coiling up in an ascending wedge. At some point, odds favor expansion to the upside. And so is this time going to be it? We'll watch the mid here. That's going to be the key level. And again, the mid's 155.01. So that's going to be the zone for day traders to defend intraday. Any failure to hold that level likely sparks a return back toward recent lows, perhaps into composite VPOC to retest these lows. That's going to be 150. So it could be a quick rejection if that were to occur. So watch this zone, and then we'll be looking for the next major move once we decide direction. All right, that's all for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.